What's going on, traders? Welcome back to the channel. Today we're going to be talking about the carry trade. What is it and some simple ways to trade it. So let's get into it right now. So before we go any further in the video, if this is your first time here and you're looking to increase your skills as a trader or improve, start right now by subscribing to the channel down below. So what is the carry trade? This is a very popular strategy when it comes to the Forex world. A lot of banks and institutions use the carry trade on a regular basis. And the basis of the entire concept here with the carry trade is that different currencies or currency banks, right, offer different interest rates. And there's actually a potential there for some money to be made here in the form of swap payments or credits to your account. So what exactly is currency trade? Well, there's differential, like I mentioned, different bank rates that are offered around the world for different currencies. And these differentials in interest rates can actually give traders an opportunity in the form of what we're going to talk about here today, which is the carry trade, right? Swap payments, you've probably seen them on your account if you trade, are debited or credited each day at 5 p.m. Eastern. That means that you get a little bit or a little bit, a little bit taken or a little bit given to your account on any said day that you're holding a position. And I think one of the best ways to actually teach the carry trade is to work through an example. And so we're going to do that right now with the USD CHF. So let's say that you're buying the dollar Swiss, right? Well, it actually yields a positive swap to our account each day for holding it overnight. So for example, if you are long the USD Swiss, in case you don't really know the terminology well, that actually means that we are selling Swiss francs in exchange for US dollars. So one bank is being exchanged for another essentially, and we're using different currencies. You're betting that the US dollar will appreciate rather than the Swiss franc. So we're kind of shorting one and buying the other at any given time when you're trading a currency pair. So let's talk about the mechanics. Let's break them down a little bit better. So we just mentioned the dollar Swiss. You get paid to hold that position overnight, meaning that the longer you hold USD Swiss, the more money you actually get debited to your credit, or you get credited to your account each day on each turnover or each new day in the currency world, right? So in the carry trade, there is two currencies, right? We have a currency pair, so we have two currencies involved. We have one carry currency and we have one funding currency. Now the carry currency is the one that's going to be paying a higher interest to you. So this is the one that's going to be crediting you. And the funding currency is what we're going to use to actually buy that currency, right? So when we're buying the USD Swiss, remember we're selling Swiss francs to buy the US dollar, right? So investors borrow or short the funding currency and they buy the carry currency. Back to our example here on the dollar Swiss. If we have that dollar Swiss long, let's actually talk about the numbers that are involved. The USD currently at this time has an interest rate of 2.5%, and the Swiss franc interest rate is negative 0.75%. So what you can see is there's actually a spread there, or a differential in the interest rates being paid out by those different currencies. In fact, the Swiss franc is negative, right? So US dollar in this case would be our carry currency from the slide before, and CHF is going to be our funding currency. We're going to use the CHF to buy the US dollar, right? So let's talk about the differential. This is a visualization. Remember, we talked about the US dollar having a 2.5% interest rate, which means 2.5 per annum or year, and CHF is paying negative 0.75%, which is interesting because if we go to the next slide, you'll see, well, there's actually a spread there. And that's why we get paid to hold USD Swiss, is the USD is paying us interest and the CHF is, we're using that money to fund and buy the US dollar. So that spread there is where that swap payment comes in. So how can we actually trade it? Now that we know what the carry trade actually is, let's talk about some simple ways to trade it. Now, obviously, I'm not going to give you a full breakdown of a strategy, but I have some videos for that, so stay tuned. That's coming later in this video. But now that we know how it works, what are some ways to trade it? Right, we want to look for opportunities in favor of positive swaps. If you're looking to take advantage of the carry trade, you want to be in favor of, the currency that's going to pay you more interest, and you're going to want to sell or short the other currency, right? That funding currency, you want to sell it, and that carry currency, you want to buy it, right? So here's some simple examples. There's more than this, but currently the USD CHF being on the long side will pay you. The Euro USD being short will pay you, right? So meaning that, let's use the Euro USD for a second, right? That means that we actually get in favor, or we get a positive swap if we are actually shorting the euro and using that money to buy the US dollar, right? And USD JPY once again is long. So the US dollar currency is currently paying a nice little interest, right? So we actually want to be in favor of the US dollar in most cases. So how can you use this? Well, in your trading, let's say you're using a trendline pullback, maybe you only want to buy trendline pullbacks that are in favor of a currency swap, especially if you're on that longer time frame. If you're trading that 4-hour chart, that that 1-day chart, or even the weekly chart, the currency swap rates could be really influential on how your trade actually plays out. So for example, if you're only going to buy the US dollar Swiss, you could make money just from that positive swap. And if you have a nice technical setup and you have a trading strategy in place, that's a double positive, right? So you make money on your trades, and you also make money on the positive swap that you would be receiving. That's why banks and institutions love this, because a lot of times they use those higher time frames, right? So they're trading on that weekly time frame, holding that swap payment, making nice payments there, collecting interest, as well as doing whatever else sort of trading that they're doing, right? So next up, guys, I have a couple videos that I want you to check out. You can go ahead and click into them right here. They're super useful little strategies that you can actually use from a technical perspective to help gauge your carry trade opportunities, right? So again, we want to be trading in favor of the currency pair, but we also want some strategies. So these videos will help you guys. Thanks so much for taking the time to watch the video, and we'll catch you on the next one.